Hi, Matt McAleer, President, Cumberland Advisors. June 14th, and I'm with the Moose, CEO, Director of Fixed Income. Had a lot of rain down here this week, but in terms of dry, solid trading, fixed income, rocking and rolling this week.
Yes, we had a good week, Matt, and it was basically because of the very good inflation numbers, CPI on Wednesday, PPI, the Producer Price Index, on Thursday, and they were both below expectations, which were fairly modest to start with. The CPI was expected to be 0.1, and it was 0 for the last month in May. The PPI number on Thursday was expected to be 0.1, and that was minus 0.2. So not a smaller acceleration of prices, but a deceleration of producer prices. Now, that's 1 month.
Right.
But that kind of erased the woe is us because of the strong jobs number a week ago today. And last week was a decent week for the bond market. We have one chart here to show you, and it basically shows the Treasury yield curve from the beginning of the year, where we were at the end of last month, at the end of May, and where we are now. And you can see the movements are basically all in the longer end of the yield curve. The shorter end of the yield curve has pretty much been tied together. And why? The Fed has not moved. The Fed has not cut rates. The Fed has told you this week, we're not cutting rates anytime soon, and we're going to continue to let the higher rates do the work they've been doing, which is bringing down inflation. More importantly, hopefully bringing down inflation expectations, which they have not done yet, because if you looked at the University of Michigan numbers today, they would tell you that people's expectations of inflation are a little higher. So the market is in pretty good shape given where we are. And as we've talked here, we've thought for most of the year the fair value on the 10-year bond was somewhere between 4 and 4.25. Well, you're back under 4.25 after its little sojourn north earlier this year. So good shape. Muni market's in very good shape. Yields down this week, 3 or 4 basis points. Not as much as treasuries, but really nothing keeps up with treasuries when you get a market like this. And a very big reinvestment period ahead of us in a couple of weeks with July 1st. So
all those coupon
payments, maturing bonds, called bonds. So
see demand there.
Yeah, so bond guys are happy.
Yeah, bond guys are happy. It's a nice anchor to the portfolio.
Right.
Over on the equity side, let's do some housekeeping. We've been talking about markets in different sectors and industries. Where do we sit internally? We haven't covered that in a little while. Broadly speaking, first off, some of the strength in the Nasdaq 100 and the S&P have masked some deterioration in some of the breadth signals and momentum signals. As a matter of fact, momentum on both the New York Stock Exchange and in the Nasdaq, and I define momentum on a 10-week moving average that I share on the Monday morning meetings, has reversed negative. Not a big deal. Momentum's a short-term indicator. Does mean the market may be just in the midst of taking a breath. The one thing I do want to point out is momentum has reversed negative at a time when sentiment in the market is hitting highs.
Right.
Tough combination, right? You've got very bullish sentiment with momentum rolling over. Not something to make large portfolio adjustments today, but we have to keep aware of that. Got to watch it. Another thing that makes me think we're perhaps on the right side of the market is our last 4 trades, and I'll go over them for a moment, have all been sales. Mostly just trimming, but I did go over an international sale last week that we'll cover. Each of those trims or sales has been right. And when I say right, it's because the prices are now trading below where we sold. And that's over the last 2 or 3 weeks. So just to do some housekeeping. International, we talked about last week. We punted Mexico on a nice move higher. That's collapsed again, putting some pressure on Latin America. The cash in our international strategy is at 10%. We did not reinvest that Mexico cash, which was about a 4% position, but we had other cash in the portfolio. That's worked for us this week. International was weak this week, down about 2.5%, broadly speaking. That'll give us an opportunity to deploy cash. U.S. core, U.S. ETF, U.S. core, diversified broad index strategy. We did sell some quality, some cash flow names this week. Part of it, they had a nice run. The second thing is they really started to tick down in relative strength versus the S&P. And while we can wait and see what happens, there is always a scenario where we're at the front end of a weakening versus the S&P. So we took cash up there. U.S. core, 10% cash. U.S. ETF, we've had a couple of trades in there. We sold regional banks last week, and this week we also took down our cash flow position. Quality names, we can always revisit them. We're sitting about 13, 14% in U.S. ETF. Maybe a little high, but I think we'll have spots over the next couple of weeks.
To get some opportunities.
To get engaged. Tactical trend, if you think back a couple of months ago, I said one position was really irritating me, and that was Adobe, ADBE. It had been trading in that 520 to 460, back up to 500. It really rallied off some positive earnings news, some positive adjustments to their attitude on AI. They really didn't pump up the yearly view too much, but the stock rallied 15% up to 525, 530 today. It was a small 3% position in our tactical account. Goodbye. Adobe's gone. We punted. We can always revisit. Again, we have enough between the Qs in there, the equal weighted tech, Microsoft, that growth area of the market, if it stays strong, we're okay. We've got our positioning there. So tactical, we're sitting at about a 7-8% cash position. We'll get some shots over the next couple of weeks. So that just brings you up to speed on where we sit. If you have questions, thoughts, ideas, if you're a client, you have a question on a trade, you know to reach out. If you're somebody managing your own portfolio, you want to get an idea, get our thoughts on a position, a sector, an industry, a portfolio review. Reach out. That's our job. So enjoy the weekend.
Happy Father's Day out there, and all you fathers.
Happy Father's Day. Maybe I'll get a nice gift.
Yes.
We'll see you next Friday.